Good day, welcome back to my channel. Today I just want to guide you through how to use this strategy to trade spike. I think it's just normal indicators that we normally use, but there is a way I usually use it, and it gave me a very good result when trading spike. So to me, I can just view this as just as if we are able to hack some aspect of the algorithm in foreign in derivative market, because once you follow the procedure and steps, you can easily pick your spike and you win daily. At least you make good money once you're able to follow the step as I've explained it. So the system is very simple. Just ensure that you follow it strictly so that you can easily understand how we trade it. So what you just need to do is if you are trading BOM 1000 or BOM 500, you want to trade spike, a bullish spike, and if you are trading a crash 500 1000, that means you want to trade spike down, that is bearish spike. So what you just need to do here is just very simple. I'm going to give you the settings after I've explained how I'm using it. So for you to trade it, you need to observe some steps which I want to explain now, and one of the steps you need to follow is this. You ensure that you have your, if you are trading BOM 500, BOM 1000, BOM 300, so the first thing you need to establish is your trend. So you don't need to go to probably higher time frame to check for, to determine or to identify the general market trend. You can do everything on 1 minute time frame. So with the aid of parabolic SAR, that will help us to identify the direction of the trend, and also with the aid of MACD, it can as well help us to get the direction of where the market is heading to. But for you to trade spike here, what you just need to do is to once you get a valid signal, just pick 10 candles. After 10 candles, if the candle does not spike, wait for another signal. One thing you are sure of is this: if you are able to get like 10 signals daily, the probability of winning at least 7 out of that 10 signal is very, very high. Now, how can we determine our spike here? The first thing we need to identify, and which is very, very important, is the first window where we have the stochastic and Ishimoku. Now here, the first thing you need to identify is you ensure that your Ishimoku line, which is the black line, and your moving average on the first window is below 20. That is what you need to establish first. So you must make sure that they are what, below 20 oversold region. Now this is, here we have our Ishimoku line, at the same time we have our moving average. So that's the first thing you need to establish, that they are touching 20 or below 20 oversold region. Once you have been able to establish this, the next thing you need to do is to move on to your main chart. So you move on to your main chart. The first thing we need to establish on the main chart is our trend, which is a PSAR, that is parabolic SAR, which will signify the direction of the trend. Because as I've said earlier on, that if you are trading BOM 500, 300 and 1000, you are looking at candle moving up or spiking up. So that is why we need to have our parabolic SAR giving us direction of upward movement. That is why we have all the dots, parabolic SAR, below the candle. Now, the first thing we have been able to establish that here our Ishimoku line and moving average, both indicators are below 20 level, which is below oversold region here. So the next thing we are to establish is on the main chart, which is our parabolic SAR below candles. That's the second step. Now the third step we need to establish is to wait for spike to happen. Now here, if you look at this place now, spike happen and close above Ishimoku line. Now that we have the spike above the Ishimoku line, the next thing we need to wait for is to wait for a retracement of bearish bar to that Ishimoku line, which is this. Now we have spike from here, it's spike above the Ishimoku line, and here we have bearish bar coming down but does not retrace back to this level. So we wait till when we have the bearish bar retrace back to touch. It may be bearish bar, or the first point of contact is what we are waiting for. Once a price, a candle touches that Ishimoku line, we trigger our buy position immediately. Now here it triggers, it touches the Ishimoku line. So once it touches the Ishimoku line, we trigger our buy signal immediately. And as you can see, after like 2 candles, spike happens. Now the reason why this one is powerful is just because of our what is it called, our MACD line. Because our MACD line, the MACD bar, they are already above zero line as at the time the bearish candle retrace back and touch Ishimoku line. As you can see, we have our Ishimoku line, our bearish bar touches Ishimoku line at this level, and we have our MACD line, MACD bars above zero line as at the time bearish bar retraces back and touches Ishimoku line, which give us a valid signals. So once you trigger your buy signal, you just wait for 10 candles. So after 10 candles, you close your trade immediately. So that is how we spot forward buy signals. So one thing that is very important that you need to take note of is, as you are searching for your buy signals, once the Ishimoku line on the first window and the EMA touches 80, any signal you generated above on the main chart, you ignore it. Any valid signal, as in if there is any touch or a retracement that touches the Ishimoku line, just in this case now, here our there is the price spike up, and there is a retracement of bearish bar touching this level. As at the time it touches this level, the the Ishimoku line on the first window and the moving average, they are already above 80, which means you need to ignore it. You only look for signals when the Ishimoku line on the first window is below 20 level. Now, as you can see now, let's just scroll. Now, look at this place. Now, our Ishimoku line here is below 20. So once our Ishimoku line is below 20 here, that is when we start to scan for our valid signals. Now, in this case here, as at the time our Ishimoku line is below 20 here, you move on to your main chart to check if there is any retracement that touches the Ichimoku line. Now, here on our main chart, we have a spike. There is a spike up here, and bearish bar retrace back to this level to touch our Ishimoku line, and spike happens. So spike happens immediately. Immediately we have immediately there is a retracement from up after the spike down to the bearish candles that touches the Ishimoku line. So as I've said earlier on, once we have this, as you can see it very well now, that as at the time it touches this level and the spike happens, the bullish the Ishimoku line on the first window is still within 50 within 20 to 50 level, which still maintain our stand and validity of the signals. Now let's check another one to see how it works as well. Now if you look at this place now, here this is another signal I think we can spot here. Now from here, the Ishimoku line on the first window is coming from 80 down to 20 levels. Now once the Ishimoku line and moving average is below 20 oversold region, we move on to our main chart to check if there is any spike that closes above the Ishimoku line. Then we wait for a retracement. Now here, this is our first step, which confirms that we are within the oversold region. Now the next thing is the spike candles that happens on the main chart here. So this spike candles closes above the Ishimoku line. That is our second step. Now our third step is the retracement of bearish candle after the spike candle. Now this is our bearish candle, retraces back to touch the Ishimoku line on the main chart. So immediately it touches, we trigger our buy signal. So that is why we have a spike that happens, and as at the time the spike happens, our MACD bars is above zero line. Which around this zone here. So it confirms the validity of the signal. So my guys, this thing is very simple. Once we are able to establish the oversold region of the Ishimoku line and moving average on the first window, we move on to our main chart to check if there is a spike that closes above Ishimoku line. And the third step is a retracement, a bearish retracement down to touch our Ishimoku line. Once there is a touch, you don't wait for the candle to close, you open your trade immediately. You open your trade immediately without waiting for a close of the candle. Now let's check crash 1000 to see the opposite side of the signal. Now for crash 1000, we are waiting for the what is it called, the Ishimoku line and moving average to move above 80 levels. So once you have been able to establish that, just in this case now, in this scenario, we have our moving average and Ishimoku line moving above oversold region. That is the first step. Now the second step is to establish the trend on the main chart, which is using our PISA. And as you can see, our PISA is above the candles, which signifies that there is what? Downtrend, short downtrend. That is the second step. Now the third step is to wait for the spike that will close below the Ishimoku line. And this is the candle this is the spike candle, bearish spike candle that closes below the Ishimoku line. This is the spike candle that closes below Ishimoku line. And the fourth step is to wait for a retracement of what? Bullish candle that will touch our Ishimoku line. This is where the touches happen. Now after the spike, the bullish candle move up to touch this level. Immediately it touches, you place your buy signal there, and as you can see, after 3 candles, spike happen. So it's very, very simple. Just make sure that you try as much as possible to get almost like 10 to 15 signals. If you can get that one, it's very, very, very easy. It's very, very easy. If you can get that one, at least out of that 10, you'll be able to win 7 or 8 signals conveniently. So this is not gambling. Once you're able to follow this step and you establish all those steps, you are going to make binary. Now what are the settings that you need to put in place for you to trade the strategy effectively? Now we have parabolic SAR. That is our default settings. We have we don't need this fracas, so just leave that one. So on the main chart we have Ishimoku. This is Tenkan-sen 9, Kinjo-sen 150, and Seiko-span B 50. So you only give 4 pixel to Tenkan-sen with black color. The rest you just have it as white, because my background is white. So if your background is black, you can make this one as black, and the other side you make it white, which is that is Ishimoku. Now the next one is the indicator window 1, which is stochastic. We have 111. The price feed is low and high, method simple, and we have levels, that is 20, 80, and 50. That is the level for stochastic oscillators. And the second one is Tenkan-Sein 9, Kim-Johnson 26, and Synchron B 52. So you make the Tenkan-Sein 4 pixel and the rest you make it 111 with white. So the next one on indicator 1 is moving average, which is a period 3, method simple, and you apply it to previous indicators data. You can use a style 3 pixels for that and use any color. And on window 2 we have our stochastic oscillators normal settings 111, and our levels is 10 and 90. So, and the second indicators on window 2 is MACD, just our normal default settings on MACD. So that's all. Once you're able to apply it this way, at least with this you should be able to get it right and make quite some profit with the system. The system is very, very accurate. Just follow the procedures. Ensure you establish your overbought or oversold region. That's the first step. And once you have been able to establish your overbought or oversold region, you move on to your main chart to establish the trend using the parabolic SAR. Once you're able to establish that, wait for the spike if you are trading boom to spike up above the Ishimoku line. And once the spike happen, wait for the retracement to touch a bearish retracement to touch the Ishimoku line on the main chart. Once you have touches on that main chart, trigger your buy signals immediately with 10 candles. That is your stop loss. So with this, I believe you will be able to get something right and perfect using the system. Thank you.